Yeah, morning, Trace, and welcome to New Trading Week Ahead. I think if we set the scene and focus firstly on the equity markets, really we've seen a concentration in positive flow in the US. That's where we've been seeing the big outperformance. We've seen new cycle highs coming through in the S&P and the Nasdaq. We've seen some of these tech names, the AI names, working very well on the week. Certainly names like Nvidia flying high, AMD, Broadcom, and also Microsoft, which now has the biggest market cap in the world, eyeing a break of $400. Now, as we move past OPEX, it'll be interesting to see if we do see a bit more volatility in the market. It depends what dealers are going to do with their inventory, but definitely, we are seeing momentum favouring these markets. And the Nasdaq was the outperformer last week of the major markets, up about 2.3%. This week we are going to see stocks earnings making a bit more of a say. We've got 16% of the S&P market cap due to report. Names like Intel going to be getting a working over by clients, and I certainly expect Netflix to get very much close attention. The stock, I think the bulls remember Q3 earnings where the stock rallied 16.1% on Q3 numbers, and hoping for something similar this time around. Now, the market is implying about a 7.5% move up or down in Netflix, and the bulls obviously be wanting to see a break of that $500 mark as well. Tesla's the other stock which I think is going to get clear attention. It has had a drawdown of about 20% over the last 14 days. And the market's implying about a 5.4% move. So obviously the bulls will be wanting to hear something that turns this ship around. Otherwise, the path of least resistance remains to the downside. We are always seeing underperformance in terms of equities, as in the FTSE and also in the Chinese and Hong Kong markets. Last week, we did see the PBOC refraining from easing the medium lending facility. The market had been anticipating that to be cut by about 10 basis points. They refrained to do so, and I think that weighed on sentiment. And these markets very much a sell on rallies candidate. In fact, the path of least resistance, certainly if you're looking at the H share, looks like we're going to crack these recent lows. Now, we will be watching that loan prime rate from the PBOC. That comes out today at 12:15. That is, the prime rate is essentially the rate which individuals and households can get loans from commercial banks. I think given what happened with the MLF last week, the refrain from easing now, I think the market's lowered expectations of any kind of cut to the prime rate. But if they were to do so, then I think that may pick up sentiment going forward. We may see some moves in the yuan, and also you might see a bit of upside playing through in the Aussie dollar if they were to surprise playing through. In FX markets last week, it was the dollar that reigned supreme. The dollar rallied against all currencies, bar perhaps the Colombian peso. And we're seeing some outperformance in the Canadian dollar, the Colombian peso, as I say, and the Chilean peso as well. Where we're seeing the underperformance is again in the Japanese yen. That continues to pretty much be weak, and that has caused the Bank of Japan, and also from the government now to step up its yen intervention rhetoric, although the market is not at the point where they're ready to act on that yet. And we're seeing some weakness in the New Zealand dollar as well. Now, that's an interesting one. As we go through the week on Wednesday, we're going to see the New Zealand CPI numbers. The market's expecting that to be up 0.5% quarter on quarter, and the year-on-year rate to drop to 4.7% from 5.6%. Now, I think if you're looking at rates pricing, we've got the first cut, or above 50% by May, and 91 basis points being priced in of cuts by the end of the year. Now, I think if there's any central bank out there where that rate setting is too underwhelming, I think it's probably New Zealand. So a weak CPI number could cause a big move coming through in the Kiwi dollar. So definitely something that you need to consider for your risk management as well. But generally speaking, I think if you have a look at the dollar and the relationship it's with the implied probability of a 25 basis point cut for that March meeting. As you can see here, a couple of weeks ago, that was at 90% probability that we were going to get a 25 basis point cut. That's moved to around 50% now. So as that's moved up, you've seen that US dollar moving up as well. And that's something that we'll be watching very closely through the week. Now, in terms of the week ahead, on the data front, we are going to be watching the manufacturing PMI numbers. They're expected to deteriorate a little bit more to 47.5, and also the services numbers, which is expected to grow at a slightly slower pace at 51. We get Q4 GDP expected to be revised down to 2%. Durable goods claims, new home sales, and of course on Friday, which I think could be the most influential data point, which is the core PCE inflation numbers, which of course the Fed look at very most closely. The market's expecting that to be at 0.2%. That's going to annualize out at 3%, drop down from 3.2%. Now, I think if you put that on a 6-month annualized basis, 0.2% gives you a sort of annualized, a 6-month annualized rate of 1.9%. Now, of course, the Fed have made it pretty clear that that's what they're looking at very closely. Now, 1.9% annualized rate there gives them some scope to ease further down the line. On the politics front, tomorrow we are going to be watching the New Hampshire primary, the Republican primary there. Ron DeSantis has dropped out the race, which I guess some of his votes will be going to Donald Trump. And Donald Trump is polling about 15 percentage points ahead of Nikki Haley. Now, Nikki Haley is going to have to pull a rabbit out of the hat. She's going to have to do very well. She's going to have to win, or at least compete very, very closely indeed, or her chances of dropping out of the Republican nominee increase markedly as well. Although she may hold on to South Carolina in February, which is her home state. But it's looking like, if Trump wins this one emphatically, which the polling is suggesting, then the race for the nominee could essentially be over by the end of the week. Now, in Europe, we are going to be watching the PMI numbers coming through. As you can see here, this is what's expected. And then on Friday, later on the week, we've also got the ECB meeting. Now, the ECB have corralled the market into believing that we're going to get a cut sort of mid this year. They're obviously very much data dependent, but they're sort of giving us a view that they've got a conservative view that they're going to be looking to ease from around sort of June going forward. Now, the market's also pricing 129 basis points of cuts by the end of the year. And obviously, that's what the statement's going to be looking at, as well as what they're looking at in terms of the inflation and growth forecast playing through. But I think euro dollar at the moment, which seems to be staging a little bit of recovery on Friday, I think that probably the rallies are going to be capped into sort of 109.70, where I'll be looking to fade that coming through. Japan's going to be interesting this week. The Bank of Japan and the government certainly have been starting to talk about the yen and the weakness we've been seeing. But we do get a Bank of Japan meeting tomorrow. Expectations for any kind of action are pretty low. Market's not really anticipating a move away from negative interest rates probably until about April time. But it's probably going to be a fairly low vol event, and we're going to be looking at their inflation forecasts and growth forecasts as well. But not expecting anything from that's going to necessarily surprise too much. We also get central bank meetings from the Norges Bank, where the market's pricing about 107 basis points of cuts by the end of the year, and also the Bank of Canada, where the market's anticipating what they call a hawkish hold, so to speak, where I think the market's expecting about 100 basis points of cuts by the end of the year, with the first cut really priced by April. We're looking at the UK. As I say, we did see a bit of underperformance from the FTSE. I think the pound sort of trading a 128, 126 range at the moment. But we got those PMI numbers coming out midweek as well, where you can see here the expectations of the market. So I think that could be quite influential. Certainly those services numbers, if they were to pull back from 53.2, that could certainly weigh on the pound as well. So plenty going on. Got our eyes on crude in that range that we've carved out around sort of 75.20 down to 70 figure. And also gold, where we're seeing what happens with real rates and the dollar. Can we seem to break out of this kind of messy price action we've been seeing? So everything to play for. It could be a busy week. Trading with Pepperstone.